that I have ever taken, you guys decided to break the market. Nice. I didn't think that was going to happen, but nice work, guys. But I mean, guys, there are a lot of really, really awesome setups coming up in the near future. We already have one firing off pretty nicely for us so far this week. It was directly off of the LTMP watch list, as usual, ladies and gentlemen. We're going to be talking about that one. We're going to be talking about some of your guys' favorite names here, and just kind of going over the broad market, where things stand, because I think there's a lot of things that people are missing that could make it a lot easier for you guys to understand what's happening now and what could easily start to happen in the future. So, ladies and gentlemen, it is that time of day again. Say good morning to somebody in the live chat. If you guys would like to say good morning to me, would love to receive some good mornings over here. If you guys are new to the group, new to the stream, new to the channel, let me know. I'd love to welcome you guys in here. And as always, ladies and gentlemen, make sure you guys are hitting that like button on the way in. Costs you absolutely nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. Again, 200 like goal on the stream for me to start highlighting some additional setups for you guys here. If you guys do hit the like button, I will give you guys more of the best setups in the market. If not, I am just going to save them for the LTMP group as usual. But yeah, remember, prices are going up at the end of the month. You have basically a week and a half left to be able to hop in, lock in the lower rate, and use code November to get 50% off your first month. So let's see what we get over here, team. Market, again, we did see actually, we have to do our little bit of a roll call this morning. Let's see who we got in here so far as people are filtering in. Ooh, a lot of slackers on the like button. But we have Eddie, GC, Gerald, KM, Daniel, Romeo, Jay, Dan the Man, Yuki. We got a lot more of you guys in here that are being quiet so far, but let's see. So, Ian, what's up, man? So, just kind of looking at things so far here, I think there's a lot of just generally a lot of what I would say unwarranted fear in the market at this time. We've talked about this a lot over the past couple of weeks here. There's been a lot of conversations about, ooh, we're in a bubble, we're going into a reset. There's all of these different things that are getting spread around right now. And there are a couple of things. If you think about bubble, how bubbles form, how the cycles end up moving, I mean, we're just not there yet. We just aren't. It just historically and just looking at just behavior from the market as a whole, when you take into account all of the different factors, especially what we saw in 2020, all of this additional capital out there, a lot of what we're seeing now could be the kind of beginning-ish phases of a bubble starting to form, but we're not quite there. We're not there yet. And if we think about the time period that we're in right now, in my opinion, what it's the most similar to is .com, where you saw all of this money flying into these internet companies. You saw all of this crazy speculative behavior happening. And while we do see, again, increased levels of kind of speculation right now, you're kind of at the beginning phases of, okay, where is all of this money going to go? And you're not seeing the crazy type of behavior that you saw back in 2020. Again, the crazy type of speculative behavior that you will see will actually kind of coincide with FOMC members and speakers coming out and saying, all right, we might have to reel some stuff back in. Now, what are we actually seeing right now? The only reason that we are seeing that the Fed is not really looking or not saying that a December cut is a sure thing, which they really never say a cut or a hike is going to be a sure thing before any meeting, but it's because of the government shutdown and the fact that the Fed has not been able to receive the data that they need. Okay, so once we start to get those rounds of data coming back out again, then the Fed can make better decisions on what they want to do next. So that's not really an issue right now. The issue is that if the data comes out and inflation is higher than expected, we already know the labor market is relatively weak, then you have to make some other interesting decisions from there. Then you have the tariff stuff. Okay, well, China and the United States are looking to come to some more agreements. So even on that side, where people are saying, that tariffs are going to lead to a massive spike in inflationary pressures. Okay, well, one, that's not true. Two, even in this environment, if that's your argument, and you're going to see the country that, again, these people are the most worried about with these high tariff rates, and those rates could be coming down, well, the argument gets even less and it gets even weaker and weaker on that side of it. Then what else? I mean, that's kind of what people are worried about right now. That's kind of what we're seeing out of the market here. And what you're also seeing is that with a lot of these different things that are being pointed out in the market as being something that could cause the start of something massive, when you really dive into it, and like we were talking about just now, it's like, are these really giant issues? It's like, not really, but people are acting on it, which is why you're seeing these increased levels of volatility, where you're seeing these massive moves to the upside, then they rip it back down, and then the buyers come back up pretty aggressively, because you're going to see these two competing thoughts saying, ooh, fear, everybody's going to come in and panic sell and just start believing, oh, these narratives are starting to come true, people are selling, maybe I should be selling too, and it's that groupthink behavioral psychology element of the market that we see all the time. But then the buyers step back up and are like, yeah, but like, what are you guys actually worried about? You know? What I will say, though, is that with this, so I'm calling this the tariff zone. That's just going to be my name for it moving forward. This is the volatility zone that we rejected out of when Trump came out with that initial tweet escalating the trade tensions between the U.S. and China. It is good that we were seeing this nice move back to the upside this morning. But like I was saying to everybody on the private LTMP group stream this morning, I was like, yeah, but it's nice, but I don't really care about what's going to happen until we can really get back above a couple of these levels here. Because you need to see these buyers sustain this action here and the sellers to start relaxing a little bit more with this aggressive movement to the downside. So that's kind of what we have here so far, ladies and gentlemen. Again, as you guys are filtering in, make sure you guys keep smacking that like button. It costs you nothing to do it. Helps me out a whole lot spreading these streams out. I mean, again, how many 10x trades did we have last week? 3. There's gonna be more. I keep telling you guys. I warned you 5 10x trades ago, 10, 15, 20, 25, 30. Now 35 10x trades ago that these were just gonna keep happening. Stop missing them. Any good news on Rig? No, Rig ran to like a 1-to-4 risk to reward, and everybody in the LTMP group was told that, again, it was that was a good spot to throw stops at break even and then go from there. If you wanted to trim, you could trim. If you wanted to throw stops at break even, you could throw stops at break even. Easy. Easy, easy, easy. Where's KO? KO's looking decent. DG was right there. Let's see. AMD back down. Let's see what they want to do with the market. But the one that's off to a really, really hot start today, the only thing, again, it was on the pre-market plan, it was on the watch list, MNST. MNST looks real good. FedEx, I believe, is setting up again. Yeah, this is going to need about a week, but yeah, FedEx is starting to set up very nicely again. So let's see here. Yeah, guys, again, make sure that you guys are taking advantage of that opportunity to jump into LTMP, get 50% off your first month with code November before the prices go up so you can lock in the lower rate. Don't miss that. Again, you are seeing these choppy periods in the market, but even with that, you guys saw, I mean, last week, well, I mean, I can just like scroll through community gains. It was absolutely insane. And then what did I say? Guys, I'm not going to be here. Don't do anything stupid. And then you saw the market start nuking. Where was it? Where were the gems? Let me see. Oh, yeah. Catch Me If You Can had another 6-figure day on GLD. That was pretty fun. Let's see. Where is it? 1,000% on Lyft. That was one. I think it was another 1,000% on Rivian. And then there was a third one. I forget what the other one was. I'm trying to think. It was FedEx. That was what it was. Yeah. So it was FedEx 2,990% on with decode numbers. That was a really good one. Then it was Lyft 1,000%, and then Rivian 1,000%. So that was 3 of them that were handed out that you guys would have all had if you guys were in LTMP with us. EW. That looks good. I mean, MNSC, you're late on it now. This was a really, really, really fun looking chart. I think this one could be really great. Where's the market right now? Nothing. Again, I want to see this thing get above 73 today, but we'll see. How important is this quarter's earnings for Bull? I mean, it's not like... Bull is finally getting down to the areas here that I'd be all right with starting to take a stab at this thing. Like, if we can start basing down below a couple of these levels here, all right, I'm going to start getting really interested. But Think about like the tweets. Like, I want bull to base down below 10 and ideally deeper down below this zone, because if you're going to just chop right below this level here, like you saw, you could easily just break down, retest, and then continue. Bull also is one of the names that I really want to go through and do a deep. So in the mastermind at the last kind of section of it, we're going to go through and use the 3-pillared approach and just kind of analyze 4 individual names for you guys. You guys are going to pick them. I would assume you guys are going to pick bull to be one of them. I want to do bull for one of them. But again, I don't know what the result is going to be. We're just going to analyze them for using the approach that I teach you guys. That, again, has allowed me to give you guys, I don't know, Philip Morris at 95, Palantir in the teens, Robinhood in the teens, and then again at 30, SoFi at 660, and then again with the weekly breakout at 1360. Like, where is SoFi today? Where is SoFi? It's still at $27 a share. I own this at 660. So do a lot of you guys. And then you also, if you guys were just following along on the channel here, I was making videos about that. I mean, it was on Twitter too. Like that 1360 weekly breakout on SoFi was dirty. MNST option chain wasn't great. It wasn't great, but it wasn't terrible. It wasn't one of the worst. It wasn't like INSM. Yeah, I'm patiently waiting on bull. I think this could be eventually a very fun one. I just want to see a base. That's it. Like a deep base. But again, I haven't really done the work on it yet either. So it's like, well, just from a chart perspective, I want to see what, like, obviously I would generally want to see out of it. But again, there's still work that needs to be done. Market kind of chopping around. DG. All right, I'll be nice to you guys today, because I already had it up on the screen. If DG breaks like this 105.24, that's a really good one. I'm being nice to you guys today. You're welcome. You guys are late on MNST, but I'll give you DG. DG is a good one. It's like 105.25. You hit that. First target, 108.38. I like that. That's one of the 3 coming into today that I really liked. MNST already fired. That was the other one. And then the other one's going to get saved for LTMP. We've hit some big ones on that name too in the past. So we'll see. But yeah, keep smacking that like on the way in, guys. We're almost at 50. Thank you, guys. I appreciate it. Almost at 50. I think a lot of you guys now, UPS weekly. Just the daily 200 is going to be a little funky. I see what you're talking about. Like, it does look good. The weekly chart on this thing does look fun. Again, that daily, it needs to get above that 200 there. That does look very interesting. All right, ladies and gentlemen, let's see here. I mean, I love how MNST, this looks like really dirty. And I know a lot of you guys on MNST, we were talking about this morning, you guys already have free positions on this one from the post-earnings move. So, or like now we're in a post-earnings consolidation setup where, again, you saw a very positive reaction to the earnings. You ran up as much as 9.5% on earnings day. You have a nice period of consolidation. You broke above that high, and it's looking like it wants to continue. These are the types of setups. I already talked about rig. We talked about it in LTMP. I even talked about it just now. There's nothing to do. It ran to a 1 to 4 risk to reward. Stop goes to break even. You don't do anything with it now. There's literally nothing to do on rig. Let's say I do like DG though. They're yanking it a little. I mean, and we have NVIDIA earnings on Wednesday, so the market's probably going to be a little bit choppy anyway until that misses. Sorry, no problem. I think I did see Amgen this weekend, but it was not. So there's been two. Yeah, the weekly breakout on Amgen was disgusting. I remember I gave you guys this one at like right around 303. But again, that was earnings, I believe, too. Then you had this one, which was really good, and it is setting up again. I want to see it tighten up a little bit more for this. I do like it though. That does look very good. So keep an eye on that. I just want a day or two. It's just like, you already hit this one. It's like, yeah, I'd give it a little bit of time. Just a little bit. What up? Where's Bitcoin? Is Bitcoin holding the zone? Because we got to start talking about this. Yeah. All right. So remember back in February all the way kind of through April, we were talking about this prior all-time high zone on Bitcoin between 94,000 and basically 91,000 here. We're trading back down to it, but this has been an area that, again, you guys saw all of these wicks coming down into back in this period here at the end of last year. You sold through it, you came back up, you retested, and then you started trading up into those all-time highs. Now, right now, you're finally coming back down and retesting it. If you really wanted to do like a fun little something, I mean, you could have an entry right here. Your stop goes down below the zone and you target some levels above you. Will I do that? No, but I would say that looking at Bitcoin here, this daily chart looks very dangerous. The problem I would have with coming out and saying Bitcoin should probably move a lot lower is that you're probably going to see a lot of these buyers defend. You have Michael Saylor coming out I think he bought what, 8,100 or 8,200 Bitcoin, which was probably like, I mean, what's the volume on this? I mean, it's different volume. I mean, that's like 19,000 in volume here on Bitcoin. I mean, Michael Saylor's definitely coming in here and buying up some more Bitcoin. So that could help. But again, it's just like, it doesn't look good, but you are at a level right now, which is like, all right, the buyers might start to step up on this thing, which if that happens, you're going to want to look for things like, again, coin, maybe MSTR. Not really, but again, one of the things we were talking about this morning too was just kind of going over weekly setups and like on the weekly time frame, what you want to look for. Like Coinbase, look, this was one of the best weekly breakouts that I have seen. And actually, that's not true. Gold was probably a better one. This gold one was disgusting. Poncho, welcome. Yeah, you got any questions? Just let me know, or ask somebody in the group. They're always around to help out. Yeah, sometimes it takes everybody a couple times to go through the course curriculum videos just so that it clicks, but it's not difficult. Like, I tell this to you guys all the time. Like, guys, when you see us come out and nail the big multi-100 and multi-1,000% trades, that is not the hard part. That is the easy part of what we do with the way that we operate in the market. The hard part is, again, having the understanding of the overall market conditions and saying, okay, this is not the time to be slinging. So it really is a big focus on capital preservation versus it's like, because I could teach you guys in 10 minutes how to find these setups and trade them. And you're gonna be like, oh, cool. But like I say in the actual video series, it's like you guys are gonna have periods where you make more money in a short period of time than you ever thought possible. But you can't expect that to be every day, every week. Uranium and nuclear. What's the NLR? Yeah, I can take a look at that. This is not a setup right now, but I mean, you can see it was stair-stepping perfectly. Before, it was looking really good. CACI, I feel like I saw this weekend. Yeah, I did. I like this. I did look at this. I'm pretty sure this is a good weekly setup. Or I might have given this one to you guys. Yeah, the weekly looks decent. The daily looks fun. That one looks good. All right, MNST is pushing into the highs again. There we go. Again, I want to see over 73 today. Do I have a reason for that? No. I just want to see it closer to the first target at 75. I just want to see strong closes. DG looks fun. Like if we start snapping above 73 on MNST, that could get real fun. I mean, these contracts have moved a decent amount too, with like barely any. I mean, it has moved a decent amount from the entry point, but that could be a really fun one because the chain was a little bit messed up. Not messed up, but like spready. Yeah, here she comes. Here she comes. I want to hear that ding. MNST over 73. That's what I want to hear. Let's see. Yeah, Poncho, it definitely could. But the other thing too is that like I'm looking for setups, not trying to like force it onto a chart, if that makes sense. So like I'm not gonna sit here, like I wouldn't sit here and look at NLR all the time waiting for it to set up. I would just look for setups, you know? But you have the right idea, looking at historic price action and being like, oh, because it does give you a good understanding of saying like, oh, this is what's happened in the past. Because again, like I tell you guys all the time, like the reason why you're able to see the LTMP group members have so much like crazier success than anywhere else is because the main focus of it is always on you guys having a really, really solid understanding of exactly when and why you're entering the trade, how you're going to manage it when you're in it, and exactly when and why you're going to exit. Because if you can understand those things, all of the beginner mistakes and all of the normal mistakes that people in the market will make don't apply to you. They just don't. You won't be making those mistakes. Like people talk about too, like people talk about blowing accounts all the time too, and it's like, okay, so if the system is going to tell you to risk 1 to 2% on a trade and you're only going to be looking for the highest quality setups, let's say you're going to risk 1% on every single trade. Okay, so you're going to lose 100 trades in a row without hitting anything? You think that's going to happen? Or even 50 if you're risking 2%? You're going to lose 50 trades in a row. Really? That you guys see the setups here all the time. You think you're going to lose 50 in a row? No. And the reason why this works so well is that you would have to lose so many of those trades in a row to have those significant periods of loss, but you only need 1 or maybe 2 in order to go absolutely nuts to the upside and have your equity curve just go up, tick, 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 up, tick, 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 and just keep going like that. And that's how you have to be operating in the market, not all this other nonsense that people are trying to shove at you. So I'll throw the link in here too. For those of you guys that still need to hop into LTMP, again, use code November, get 50% off your first month. But again, at the end of the month, so in about a week and a half here, prices are going up significantly. Don't miss it. If you're not in by the end of the month and you want to hop in after, that's fine. We'd love to have you. You're just going to be paying a higher monthly rate than the people that hop in before the end of the month. You get locked in at the lower. The price that you join at never goes up on you. Crazy action to end the week last week, though. Like, really wild. I like DG, but it's going to need some help with the market here. Ooh, this is interesting. Pump was moving. All right, so Pump I'm still kind of interested in. I just need to see this break back into the kind of upper area of this range of consolidation here and then flatline again. Because this does look fun. Because this, I bet on the weekly, this still looks fine. Yeah, weekly setup on Pump still looks fine. So, still going to be stalking that one, but not really doing anything on that one in the short term here. But yeah, like you're just seeing a lot of this, like in my opinion, and then it's like the Michael Burry stuff, which like just gets people just thinking the wrong way about the market. It's just like, why do we care what Michael Burry has to say? Seriously, like how many times? Remember the market's like, oh, I think when was Michael Burry's sell tweet? Wasn't that like the market ran up like 80% since that tweet? Like, why do we care? Seriously, why do we care about Michael Burry? Because he got the big short right? Cool, great. And that's the type of like thought process that I want you guys to have. It's not like, ooh, Michael Burry said something, I'm going to then get really scared and fearful of it. This is what you should think instead. Okay, Michael Burry, who nailed, which actually was really early on that too. So again, but still nailed it. Made a lot of money. Nailed 2007, 2008, and 2009. What you should be thinking when you hear people like that starting to talk is, okay, what's their argument and does it make sense? That's what you should think. Not, ooh, they're shorting. Which even then, with the positions that Michael Burry had, it's like we're just like learning who really knows anything about the market and who doesn't. Like you saw these like day trading people that were out there just talking about like Michael Burry's got $1 billion worth of shorts on Palantir and Nvidia. It's like, okay, well, how's he doing that if he has $150 million worth of assets under management? Oh, leverage? Cool. Then why does it say put next to the position? Like it's just It's just silly nonsense, and that's kind of what's feeding into a lot of what's happening in the market right now, where people are hearing things and they're acting based on what they hear. And it doesn't mean that, like, and that's why, like, when I talk about things sometimes too, it's like I can lay out the thesis for you guys about like what's actually going on, but you also have to realize that not a lot of people actually know what's going on. So you have to then think about what do they think and what are they operating based on. How do you navigate trading options? Is it trading 1% report if you have 20K? Or do you have to trade a bit more till you get it? Honestly, Corbin, trading shares is fine. And also, you can, if you saw, like, think about it like this. With the options trades that you've seen, especially like the ones that I've showcased to you guys for like over the last, let's say, I think it's probably like 3.5, 4 months now. It's like, even if you have a $200 position size and your first target, let's say, I don't know, if you're hitting 300-400%, the next target's 1,000, 2,000%. Like there were, let's say, 35 10x plus trades, and again, that's like, ooh, 1,000%, great. Hold on. A lot of them were 2,000%, 5,000%. We even saw a 26,000% trade. So what a lot of people think all the time is that you need significant amounts of money to make really solid percentage returns, or let's say like really big amounts of money in order to make a lot of money in the market. And the reality of the market is that if you're operating the right way, you really don't. And like it also like subjects you to a lot less risk, right? Because like if you were to, let's say, every single time that you step up to the plate in the market with these trade setups, you had the potential to return on these setups multi-hundred or multi-thousands of percent. It's going to be a lot easier to just say, okay, I'm going to size smaller because I don't have to over risk, right? Because a lot of people are going to think, oh, I have to risk a lot more to make a lot of money, but not us. We don't have to, which makes things a lot easier to let run to targets. And, you know, like, does that make sense? But trading shares too is a great option too. Like even 1% to 2% risk on those. Like if you have a $20,000 account, risking between $200 and $500 a trade. Like even on some of the shares trades that I've shown you guys, like they're just Coinbase here is a great example, or gold, or like actually GLD is probably the one that a lot of you guys hit the hardest. So like just thinking about this here. So the top side of this right here is a daily close below the 10 EMA on the daily. That's a 1 to 21 risk to reward. Now, on this setup with shares, you might have had to use a little bit of leverage in order to actually get 1 to 2%, which you don't really want to be doing a whole lot of. But again, there's pros and cons. It balances it. There's a lot of positives with trading either way, shares or options, but it's not all going to be great. Like you have more gap risk with shares, obviously. With options, you can predefine your risk. Like it is possible when you're trading shares. Again, obviously, if you're in a position that gaps over your stop, well, you're going to lose a little bit more, right? With options, you get to predefine your risk, and you can sometimes ride these winners all the way up to like 500, 1,500, 2,000%. But you then also have to worry about a little bit more of like timing, time decay, expiration dates, things like that. So there's pros and cons. I like trading shares a lot better. It's smoother. You're about to subscribe? We'd love to have you in there, Corbin. Like even if you think about MNST, for example, like if you think about this here, like even, so your stop would go here, even up to here, to first target at 75, it's a 1 to 5 risk to reward. Now, do I think my options are going to be up 500%, 500% if we rip up to here? Well, they could. They might be able to if this happens very fast. But also, I don't really know. That's another kind of variable in there with options. So it's just a give and take, you know? You know? Yeah, make sure you guys if you guys do want to hop in, make sure you guys do that before the end of the month. Prices are going to be going up. But when you guys do hop in, you guys get to lock in the lower rate. Prices never go up on you once you join. Market kind of chopping around. I love where MNST is right now. It's looking really good. What is this? Oxy? Well, a lot of the oil names, some of these oil names do look good. I think there's some better setups in these. You guys have them though. Romeo, I'm not sure what you're talking about there. But yeah, Bitcoin, I mean, it doesn't look good here, but you are at a pretty solid area where you could easily see a bounce. You're at a good area there. The other thing, too, that you guys got to realize, too, is like, yes, it doesn't take a whole lot of money to go absolutely nuts, especially trading the way that we do when the markets are hot. But you have to think about it from more of like a longer term vision. Like once you got the whole point of this and what I do for you guys here is to give you guys the skill set to have long-term success in the market. To be giving you guys a toolbox that nobody can take away from you once you know it. Then I'm here to help you navigate the market conditions. That's really what it is. And then obviously you guys have all the setups too that look the best. Where's the price of crypto? Is about 2 seconds before the exchange. Could be a data feed thing. Could be where TradingView's pulling the data from. You know? Yeah, I should be able to get more YouTube videos out for you guys this week too. I always say that, and then it's just like, I'm traveling, or I'm doing something. But I have been posting a lot more shorts, like TikToks, Instagram Reels, YouTube Shorts. Been very active on Twitter. Not this weekend, but Nashville was fun. What? So, again, like I was talking about this morning, I'm really not expecting to see a whole lot out of the market until NVIDIA reports on, I believe that's Wednesday. But at the same time, what have we seen recently? The market gets worried about an event, the event happens, nothing happens, and then it kind of goes back into that period of like, oh no, and everybody freaks out. I think the main thing that people are worried about is this rate cut in December situation, but like, you can't, this is an interesting thing, guys. Like, the market can't have it both ways. The market can't be out here, like people and just like overall narratives. You can't be screaming bubble, bubble, bubble. And then also being like, oh, but the Fed's going to leave rates where they are. It's like you can either have a significantly declining interest rate environment that could potentially lead to a bubble over the next year, or you can have a period where the Fed leaves rates a little bit higher, unemployment continues to go up, and inflation comes back to the downside a little bit if the argument is inflation. But you can't have both. Right? Like you can't really make the argument for like both. You could then say, what you could do is say in both scenarios, you could see certain things that could be interpreted by the market as negative, but I could make the same argument on the other side that says I could interpret those two things as also positive, right? Like on one side, if the Fed's going to be cutting rates, it's going to increase the availability of credit, flow of money throughout the system, and you easily could see asset prices go up. The negative argument is, if the Fed cuts rates, you could maybe see inflation become a little bit more sticky if a lot of this money does flow into AI and again, these technological advancements in AI, which could end up leading to even higher unemployment rates anyway. Okay, cool, but that's going to take a lot longer in order to figure out. And on the flip side, if the Fed doesn't cut rates, which they eventually will, it's just a delay, it's okay, so then those inflation metrics can start to tick lower and lower, or maybe they won't start to shift back to the upside. You can but you can't have it both ways and say bad or good. You have to be able to look at both of those things. And I think that uncertainty is what's driving the markets around a little bit here. But you got to think about the overall big picture of where we're in. We have an administration that's focused on growth, growth, growth. We have the Fed that's saying that they're okay with letting inflation run a little bit above target as long as growth is not sacrificed. So growth elements there as well. So the market's going to freak out sometimes. Okay. The market's freaking out. And what did we do last week? How many 10x trades? What? 3? You had Lyft, Rivian, and FedEx, both two of them were 1,000%ers, and one of them was a multi-1,000% trade. And then you have me ever since that tweet came out saying, all right, smartest decision is either touch nothing, and if you do, size very, very, very small, because if the snapbacks do end up happening, we're going to see some absolutely massive gains, but you don't want to be subjecting yourself to significant amounts of risk in the short term in these environments, right? There you go. That's the game plan. It's not hard. Box and AWS launch multi-year AI partnership. Ooh, is Box moving? Okay, well, that's looking like it's seeing some volatility over here. Oh, my. That's some movement. Yeah, market pushing lower here. What the? What the? Where'd my DMs go? What the? I haven't even looked at this. All right, I'm gonna have to figure that out later. Twitter's being strange. Yeah, we also have a lot of great setups. Like, you get through NVIDIA earnings, you get through all these stuff. Okay, maybe we... But, like, I want you guys to think about this, too. What was the market really worried about over the last 3 weeks? Tariff stuff with China. Ooh, resolved. What else was it worried about? Oh, government shutdown? Oh, resolved. Now, the most important part of the government shutdown worry was the data releases. So the administration saying what they are as relates to the data, not releasing it. I can see why the market's a little bit uncertain based on that. But it's an interesting dynamic that we see where it's like everybody freaks out. We have an event. Putin. What are we freaking out about Putin with? What's up with Putin? What's he doing? Sonny, good morning. What is this? I mean, is it what? Is it Venezuela? Or is it Argentina? It's one of those two. I always get those two confused. But that's another one. It's like people are a little worried about what we're doing in South America. And it's like, well, if you actually understand what's going on in South America, I believe it's Venezuela. Somebody correct me if I'm wrong. It's Argentina or Venezuela. Where were we blowing up boats? I'm pretty sure it's... Yeah, I'm pretty sure it's Venezuela. Yeah. But one of the main reasons why we're operating that way is because, one, they have like the largest oil deposits in the world and also have a very, very close tie to Russia. And they're with it very close to the United States. So it's basically like kind of like Cuban Missile Crisis all over again. Yeah, it is Venezuela. Okay, cool. Thank you. That would be the only Putin thing that I'm seeing. It's like, okay, it's also kind of similar to like US and Ukraine stuff. Oh yeah, Argentina's Milei, right? Yeah, that's what I thought. Yeah. Okay, yeah, I always get those confused in my head. But it's almost just like Putin's like, oh, you did this with us in Ukraine, we're going to do it with you in Venezuela. It's like, it's just like posturing nonsense. Like that's, unless there's something critically wrong, like earnings start to get, I mean, yeah, the S&P 500, I believe is like, historically a pretty overvalued areas here, but like because then it comes back to like the bubble argument. And it's like, what is the strategy? What have we talked about time and time again as being the strategy for a bubble? It's not to be short, it's to be long. It's to be long and trim along the way. Adding firepower back to the cash balance. So in the event that we see a big drawdown in the market, you have cash to deploy. I don't think I will ever be an individual that goes, oh, I'm selling everything, or ooh, I'm going all in. It's just not. It's like a wave. Like you're kind of just moving with the current. You're saying, okay, it's just like things are getting a little crazy. Maybe trim a little bit, come back in at the lows. It's that. Because again, you want to be as inactive in the market as possible. Ooh, MNST dropping a little there. You want to be as inactive in the market as you possibly can. You know? So let's see. Market selling off. Do your worst, market. Like somebody was asking me, they were like, oh, you were thinking of selling covered calls on AMD. Are you going to do anything on your position now? I go, well, I mean, look at this weekly chart here. Why would I touch anything on AMD? I own the stock at $11.39. Last year I was trimming, sold some covered calls on it, made a decent amount of money doing that. And then now it's just kind of waiting and seeing. If this thing gets really aggressive, really overextended, okay, I'll sell a bunch of calls against my position again. But you can't let some of the short-term noise decide what you're going to do with long-term positions. And I think one of the main reasons why you saw a lot of people freaking out over the last month is they bought, excuse my language, they bought dog shit at really elevated levels when they shouldn't have. Like if you're making smart decisions in the market all the time, guys, like really following a specific process, so when you're getting solid risk to reward entries, looking at the macro conditions and understanding the things that you're buying, you will see like crazy action in the market, but you don't have to worry as much as you see. Like, when you see the CNN fear and greed index at extreme fear, when the market's like 1.5-2% off the highs, that means there's too much kind of gambly, crazy nonsense going on in the market. Because you're going to see like those short drawdowns, those like high flyers, those like growthier names that like maybe aren't the things that you want to be putting your money into, but a lot of people did because everybody else was. Those are the ones that are going to get hit hard and drop 30% in a short period of time. And the people that were buying at the top thinking that they could never go down are now screwed. Why'd they do that? I don't know. You know? It's things like that. Like that's why you can see that fear get spread really quickly, because people want to be so active in the market that they're like, I have to do it. And it's like, no. There's a time and a place for everything. Uh-oh. We're nuking. Oh no, we're nuking. I love the tweet last week. Wasn't it before Thursday where the government shutdown stuff got voted on in the House, and then the White House account tweeted like, we're so back, and then the market just like nuked? Refresh my your memory on my system. Well, Pancho, if you said you just joined in there with us, then you gotta, again, like, just go through the videos a couple times. You'll be good to go. But in terms of like the mid to long-term investing stuff, like analyzing markets and things like that, like that's what the mastermind's for. And today's mastermind lesson is a really fun one. It's reading and analyzing economic data. So we're going to be going through all of the major pieces of economic data that come out, and then basically like explaining exactly what they are. Because I think a lot of people are like, ooh, this. And it's like, they're like, oh, this came out. And it's like, okay, but what does it mean? And you're like, I don't know. It's like, okay, well, those are things you have to know. And then the different like scales of how they're rated, and like how the different data comes out in relation to like, is this expansionary? Is it contractionary? Is it this, that, the other? How is it coming in relation to the expectation? Things like that. But all of that is to build into the 3-pillar approach that I talk about and I use in the market. you know? So we're nuking now. Uh-oh. I mean, even with this volatility, we still are seeing MNSC very strong. But if the bottom drops out of this thing here, I wouldn't expect it to go. But that's a chart that you can't say no to. That's an epic looking chart. So we'll see. If it hits, it's probably going to be a big multi-hundred, multi-thousand percenter. If it doesn't, who cares? The outcome of one individual trade is meaningless when every single trade I take can run multi-hundreds, if not multi-thousands of percent. Why would I care? I have to take them because you don't know which ones they're going to be. But you have a high likelihood of knowing what they look like before they're about to rocket. GRAL. Let's take a look at that. On a run today? Is this a good setup, though? I mean, on the weekly, I bet this looks decent. On the weekly, I bet this looks really good, actually. Yeah, that looks really good on the weekly. Where's the... Oh, it already reported? Ooh. You get another week or two on this thing. This could be some fun, Jesse. I like that. But again, you guys all got to realize, like, the market is a lot less complicated than everybody thinks. It's not as complicated as everybody thinks it is. People make it complicated because they think that some sort of level of analysis that they're going to do that everybody else is looking at is giving them some sort of edge. You think unusual options activity is giving you an edge? No. You think looking at 13Fs and like all of these delayed report, filings are actually going to give you some sort of insight into what the large institutional money is doing? No. You don't even know if they're in the trade. You don't even know if it's a hedge. There's so many different variables. That's what people fail to realize. It's like they see one thing and they just forget to think about what they're looking at in larger context. You know? Yeah, they're nuking this thing pretty good here. MNST's holding really well, honestly. That's some strong action out of that thing there today. So let's see if we can hold. I don't see anything coming from the news feed either. I see nothing. I can take a look again though. Nope. Construction spending was up 0.2%. Consensus was down 0.1%. Ooh. AMD over the next few weeks could give us a really, really fun weekly setup going into next year. That could be really good, actually. Give this like a week or two, maybe 3 weeks. Going into the end of the year, this could give us something ridiculous. Yeah, guys, the sooner that you can adopt this less trades, more profits methodology and mindset, it's just going to help you. Like, I think about it. Like, think about what I tell you guys all the time. It's like the main piece of feedback that I receive from people that jump into LTMP is they're like, I wish I was doing this all along. And I'm like, I know. Everybody does. Why wouldn't you? You know? Like, who would look at something in the market and be like, every single time that they step up to the plate, it could run multi-hundreds, if not multi-thousands % and be like, I'm not going to do that. It's like, well, hold on. What's wrong with you? What's wrong with you? You know? The problem is some people just don't have patience. You got to be patient enough to wait for them. Hood. Ooh, Hood looks bad. Yeah, Dave, I see that. Hood. With that show. Oh, the weekly looks really nasty. Uh-oh. Yeah, the weekly looks really icky on this. You see this here? Uh-oh. Uh-oh. Uh-oh, Robin Hood. I mean, DG could still fire here. That could be a fun one. Yeah, market's just leaking out here. Bleeding out. Hey, I'm looking for anything useful. Is there anything useful? Let's see. Oh, that's true. I'm just looking for something that could be useful here to us. Just in terms of news, in terms of context, but I don't think there's really anything else to add. Like, you know? BMNR is now down 40% in the past month. Oh, what? No. Wait. No. You're telling... No. Wait a sec. You're telling me that when I say that I hate these things because they're literally just a symptom of the environment that we're in that don't really have any value, that the risk-adjusted returns suck, that you probably want to be staying away from them, that they go down 40% a month? No. How do you set up paper trading? For a couple of days? You might want to do it for like a month. But it depends on what broker you're on. Webull, there should just be a tab somewhere. I don't really know. But you also could just do it on TradingView and just set alerts for stuff. You don't actually have to be like, I'm taking it, like, click buttons, you know? Oracle, tech stocks aren't looking good. No. But, like, guys, like, why would if I'm, like I was telling you guys the entire time on BMNR, it was up here, it was at $72, it was at $65. And every single time people would bring this up to me, I'd be like, all right, so you're bullish on Ethereum, why not just buy Ethereum? It's like, oh, you want leverage on Ethereum, just get leverage on Ethereum. And nobody would be able to say anything back. They'd be like, I'd be like, oh, okay. But then what people would do is they'll be like, yeah, but look at the year-to-date returns. I go, none of you owned this before this. None of you owned this at like $4. They used to say that on SBET. They were like, yeah, but like year-to-date, it's up this much. It's like, well, true, but year-to-date, nobody knew that this was going into this, like, they were taking on debt to go buy, what do you call it? To go buy Ethereum. Once that news came out, then it ripped, but none of you were in there before. It's very similar to what we were talking about earlier in the stream, where people were freaking out because they bought things like BMNR and SBET near the highs just because everybody else was doing it with no clue of what was actually going on. Tech stocks can go crazy if NVIDIA knocks it out of the park again? Oh, absolutely. Like, SBET and BMNR are actually great examples of that. Like, the stocks that get hit the hardest when the market slips a little bit. Like, how much is Bitcoin down off that? Or, actually, Ethereum is probably a better example of this. Actually, I kind of want to watch DG here. It's close. There goes Bitcoin drilling now, too. Like, how much is Ethereum down off the highs? Where was the high? August 25th? Okay. How much is it down? 25%? 37%. So it is kind of similar here. But what is this? From August. Where was SBET though in August? July, August. Okay. What is this? 28 to $10? 63%. Uh-oh. Now, to be fair to these, there's always a time and a place. Now, if these start to set up SBET, BMNR for trades, oh, it could be really fun. Mara, I am not a fan of the miners and what they're doing. with the data centers. If you guys have studied like one, different time periods in history, but also what Mara is doing, and I think some of the other ones too, shifting into this data center play, it's honestly really similar to what was happening with, like, I think it was what, fiber optic cables, I think it was, and also data centers back in the .com era. They're like shifting into a very, very crowded industry. I don't like them. You know, there's just like a lot of different things that you're just like, it's warning signs. Like, speculation can be fun, but here's the thing. Okay, so if you're going to be looking at things like SBET, BMNR, Mara, Open, a lot of the Beyond, a lot of these other, like, quite honestly, garbage names, in this type of environment, they can run like crazy. But here's the thing. Okay, so if we know that there's garbage, but it can run like crazy, this is what I want to ask everybody, and I would like to see some responses here. What do you do with that? Like Open or like BMNR or some of those other silly names out there that have gone absolutely nuts. What is the actual smart thing to do with those names in the market where we know they can go? Because you know what all the other retail traders are going to think. Okay, I'll give you guys a hint. Think about DNUT, A, and AEO after Open the first time. Think about that. What is the smart thing to look for with those names? Yeah, perfect. You guys got it. Wait for it to set up, trade them, but not invest long-term in them. Right. So what does that bring us back to? LTMP. You just trade them. You don't join these echo chambers and say, nope, it's going to go up another 1,000%. It's like, no. You trade them. They're there to be traded. They're not there to be invested into. PL. Let's actually take a look at this. Planet Lab. Nope. Nothing here, Pancho. Right? So they're there to be traded. They're not there to be invested into. Think about Open. Think about how much like trash talk I was talking on Open. Think about that all the time. How much trash I talk on Open. Where did I give it to you? 260 on the breakout here. I give you guys Open at 260. Boom. There you go. It's like, but they're not to be invested into. Maybe it has success, maybe it doesn't. But in this type of environment, they're trades. And also, the best thing too is you probably can take a little bit more risk on them and get a better, tighter risk to reward entry if you're trading them with the LTMP methodology than if you're just slinging it along the way, you know? If you're just buying, random, you're buying it up here, you're doing, you know? You're going to make more money on them just trading them the way we do than if you just start randomly buying stuff. So, again, if you want to have different results than everybody else, guys, you got to think and act differently than they do. It's with everything. If you want to be just like everybody else, think like everybody else, and have the same results as everybody else, do the same things that they do. Ow. I just kicked my desk with my shin. Ooh, hello, market. All right, where's DG? It's okay. MNST struggling a little bit here, but still looks good. I like that setup. see here. All right, guys. It is also... You keep coming back to my videos and it tempts you to start it again. Mario, yeah, I mean, we'd love to have you in there. I think with a lot of people, what they look at is they go, like, they just don't commit. And the thing is that the way that we operate in the market is to give you a skill set, again, like I said before, that's going to set you up for long-term success. What too many people are doing in the market is they're saying, I'm going to try and hit a couple trades and make money now. And while you easily can do that with the way that we do things, like you guys saw 35 10x trades in like the last 3.5, 4 months. They're disgusting. But like you have to understand that like the reason why we're able to do that is because of all of the other things that we've set up in advance. Thinking about the longer term and saying, okay, these are the things that we need to look for. When the market's hot, we take advantage of it. And also being able to listen, again, to the warnings that I say send out all the time and are like, small size. And that's the thing too, like, and I was talking about with, what's his name earlier? I forget who it was. It was Corbin. It's like, you really don't need very much. You don't need to be risking as much as everybody thinks they do. Think about last week and what I've been saying. Like, I think you guys got to pay attention to this more. Like, I say things to you guys on the stream all the time, and then you see certain things like that, like, just play out. What was one of the main things that I've been saying to you guys over the last couple of weeks here? Don't be going crazy with sizing, because if we are to see these increased levels of volatility, even though we're seeing these really good setups, they could easily fail. But if they hit and they start to follow through a little bit, they're going to be absolutely massive. So what is the smart thing to do? Size very small, size for zero. Okay, then what happens? Last week, you had 1,000% on Lyft, 1,000% on Rivian, and almost 3,000% trade on FedEx. Now, the FedEx one is interesting because the only way that you would have actually been able to hit the FedEx trade is if you listened and actually were sizing for zero and sizing a lot smaller because of all the increased volatility on it, right? Because it ran up, it came back down, and then ripped. But again, the only way that you would have been able to nail that one is if you were listening. So that's the point. It's just listen. When I say pay attention or pay a premium, it's like Venom, he's not even old enough to trade yet, but he's been paper trading for 2 years. Like Venom is like, that's like one of the best things I've heard all day. It's like you're gaining the experience that you need in the market without taking on the actual financial risk of doing it. But again, all of you can do this. Like I tell you guys all the time, the nailing the big trades is not the hard part. It really isn't. You guys listening and saying, like, and being able to understand, like, okay, this is not the environment to be going nuts. That's the hard part, but it's not. You also have me telling you all the time. You know? So, all right, guys, I think we're going to wrap it up here for today. Again, normal streaming schedule this week. I will throw the link to hop into LTMP for you guys one last time here. Again, use code November, get 50% off your first month, and you're going to be able to lock in the lower rate here before prices go up at the end of the month. Again, once you hop in, the price never goes up on you. You get locked in at the rate. What else? We got Mastermind tonight. I should be able to make some shorts for you guys today. I just gotta, get around to that. And then, yeah, we'll see what we get. We have NVIDIA earnings this week. We got a lot of other earnings coming out. We've got, again, some FOMC speakers are probably going to be making some comments here. We've got some really, really awesome setups to look for, too. I mean, MNST still looks really good. Again, hasn't followed through over that 73 area that I quite want to see yet, but I don't know. We'll see. Market's nuked how many points here? 25? Let me see. 74. Oh my God, what? Market fell 75 points, 60, 70 points here. I thought it was like 25. Jeez. Yeah, guys, the amount of volatility that we're seeing here is nuts. And that's what I've been saying. You gotta protect yourself. So, for those of you guys that are hopping into LTMP today, just make sure that your Discord account is connected to your WAP account. If that's the case, you're gonna be automatically let into the group. I'll be able to direct you to the Start Here area. And you'll be able to start going through the curriculum videos. And again, as always, if you guys have any questions, just ask. I'm always around to answer. So, team, I will see you guys later. Have a great rest of your day. Peace.